4 months ago, I invested in one of the most popular weekly dividend ETFs, and since then, the results have genuinely shocked me. With the share price slowly dropping, some investors are even calling this ETF a yield trap. In this video, I'll share my experience with YieldMax's ULTY, show how it's performing, and explain my plan for navigating the current market volatility. This one's going to be interesting, so let's dive right into it. Now, you might be wondering, what first pulled me and thousands of other investors towards ULTY? It's the same factor that's driving the surge in YieldMax funds, those large dividend yields. On paper, it seems almost too good to pass up. ULTY advertises weekly payouts, and the idea of consistent cash flow is hard to resist for anyone hunting income. But as I've learned over the past 4 months, high yields come with a catch. Many of these funds face something called NAV erosion. In simple terms, while you're collecting those attractive dividends, the underlying share value can slowly decline, so your total return may not look as strong as the income suggests. I'll break down exactly how this is played out in my own position a little later in the video. ULTY began catching serious attention this past spring thanks to a strategy that stands out from other YieldMax funds. Instead of locking into a single name like MicroStrategy or Nvidia, ULTY rotates through a basket of roughly 20 to 30 high volatility stocks with deep options markets. That rotation gives YieldMax room to run trades such as callers, call spreads, and put spreads to harvest options premiums, and those premiums are then distributed to shareholders as weekly dividends. When the strategy first launched, the share price traded in a pretty tight range, hovering between about $5.80 and $6.35 per share. This went on for several months leading up to August 2025. During that stretch, the fund was even paying steady dividends, roughly 9 to 10 cents per share, which worked out to about 1% yield every week. But as the months have gone on and market conditions have shifted, we've started to see the share price gradually trend lower. Throughout September 2025, ULTY dipped as low as $5.48 per share and briefly pushed back towards the $5.70 mark. That raises the question for many investors. Are these high weekly payouts really worth it if the NAV keeps declining? In my first check-in video, I started with just a $500 position in ULTY. This was back in June 2025. Over those first few weeks, I collected 4 steady dividend payouts, and the share price even climbed above my book value, giving me a positive total return. That early success convinced me to increase my position to $2,000 heading into month 2. Since then, I've continued to reinvest half of my dividends back into ULTY while taking the other half out as realized gains. But in the most recent update, my total return slipped into negative territory. Now, after nearly 80 days, about 4 months, we've reached present day. So let's go through the numbers right now. So this is the tracking sheet that I've been using, and there's a lot of numbers here, but don't worry, we'll break it all down step by step. Let's start with my principal investment. How much of my own money have I put in so far? I've made 3 out-of-pocket purchases totaling $2,016. On top of that, I've been reinvesting a portion of my dividends and even moving some payouts from other YieldMax ETFs like MSTY and NVDY into this position. Altogether, those drips and transfers add another $330, bringing my total contributions to about $2,346. Now, in this main table, I track everything: dividend amount per share, the total dividend I received, the non-residence withholding tax, and my net dividend after taxes. As of recording, I've collected about $387 in gross dividends, but after this withholding tax, my net comes to about $329. Comparing that to my total contributions, that's roughly a 14% yield over the past 4 months. Now, what have I been doing with these dividends? ULTY is one of the funds where I actively take 50% of the dividend and move it into ETFs I'm more comfortable with. This allows me to take some realized gains each week, but I also don't want to miss out completely completely on the compounding potential of this position, which is why I reinvest 50% of my dividends back into ULTY. I track all of this in a table down here. Back in June, with my first few dividend payments, I actually just spent them. So if you look at my totals, my cash out percentage is slightly above 50% since I only started this split strategy a little later on. You can see every purchase order I've done here. So about $181 or about 55% of my net dividends have been cashed out from ULTY, while the remaining $147, about 45%, has gone back into this position. Now, I like to take this one step further and also compare my out-of-pocket contributions of roughly $2,016 to my realized gains. Using that, the $181 I've cashed out means I've already returned about 8.99% of my principal in just 4 months. Now, we've gone through a lot of performance data, except for everyone's favorite topic on YieldMax, and that is the NAV erosion. So my average purchase price for ULTY sits at about $6.18 per share, while today it's trading closer to $5.67. To calculate my total return, I just take the current market value of my shares, add the cash in that I've already taken out, and subtract my total book value. When I run those numbers, my total return actually comes in just slightly negative, around 0.6%, or roughly $14 down. Now, that's an unrealized loss, which is important. For me, it's not a major concern because I'm sticking with the same strategy, continuing to collect weekly payouts and using those dividends to build positions in other ETFs over time. So even though the market's a bit all over the place, I still plan on using this strategy in the future. It's working for me, and my biggest debate right now is on the drip factor. I keep going back and forth between whether I should reinvest all of my dividends or keep splitting them the way I've been doing. And that actually brings me to what I'm planning for my next few videos. I've actually been looking at a few of the round hill ETFs, where I'm considering looking at doing just drip 100% back into these ETFs and seeing how they perform. So if you're curious about those results, just as I am, make sure you subscribe so you don't miss that update. And if you've made it this far in the video, please leave a like and let me know in the comments, what do you think about ULTY? As always, remember this video is just my personal experience and not any financial advice. Thank you so much for watching.